Hey guys, is everyone able to hear me? Is everyone able to see me? Right? Um, cool. Hey Diana, nice to see you. Right, can hear and see. That's awesome stuff. That's awesome. Right. Right, Vitor, nice to see you. I got Bob, Robin, Jack, Alan, Kelvin, James. Nice to see you guys tuning in nice and early. Hey. How are you guys, man? Right. How are you guys? It's been a while. I think it's been a while since since I've seen you. It's been a long time, right? Yeah, I try to go I try to chat in the room and stuff, right? But yeah, it's been a while, right? So the good thing is that you guys have been getting a lot of different uh well, exposure to different kind of teaching approaches, right? Especially the fundamental analysis and stuff, the Nike tick guru, right? I've taught you all there is to Nike, to the Nike tick already. The next thing I need to teach you is maybe Adidas, Adidas, Under Armour. I need to find some other pattern to use, right? But yeah, I'm researching a lot into candlestick patterns, right? High probability candlestick patterns, right? A pretty interesting indicator that I have kind of put together, even an automated one, right? So that that would be in the next kind of strategy that I release, right? And also this thing called a multi-time frame scalper, right? Something which I'm also working on. Pretty good stuff, right? Yeah, hey Steffi, nice to see you, right? Anyway, this is like the first time, I believe, it's the first time in 2 years which I'm not wearing a super dry shirt, right? So yeah, times are changing, right? Times are changing. Yeah, yes, Jin is really good with the fundamental analysis, man. Right? Yeah, guys, I'm pretty good, right? Today's session will be done by both me and Annabelle, right? She'll be teaching you guys Heiken Aishi, Heiken Aishi, Heiken Aishi, right? So the thing about Heiken Aishi, right, is that by itself, hey Simon, nice to see you. Hey Desri, nice to see you too, right? Yeah, the thing about Heiken Aishi is that by itself, it is not exactly something you use in isolation to trade, right? It's something that you would implement a certain kind of trading strategy pretty well. So the concept of Heiken Aishi, right? I'm going to give you guys some broad concepts over here to set the tone for the rest of the webinar, right? The broad approach to Heiken Aishi is that yes, it tends to be a momentum kind of little bit of like an indicator or interpretation of charts. We know that charts, when it comes to chart patterns, right? I told you guys the price action stuff like reversals. You're talking about shooting stars. We talk about dojis. We talk about engulfing candles, right? We talk about even the breakout stuff like three white soldiers, three white soldiers, three black crows. Yeah, that kind of stuff. We use that as a gauge on like how strong the candlesticks are in forecasting a price breakout, right, or a reversal, right? Now, the interesting thing about Heiken Aishi is because of the way that they blend the calculation of momentum so nicely into the candlesticks is that you can actually use it much more readily instead of looking for a very unique setup of like three white soldiers for a bullish breakout or three black crows for a bearish breakout, right? With Heiken Aishi, just looking at a couple of candles, right, the change of momentum from green to red or red to green, right, the number of candles, the size of the candles, right, even the wicks, right, the shadows of the Heiken Aishi candles are very different from traditional candles, and that actually allows you to kind of, if you ever watch Stranger Things, there's that your world that you're in, and there's the other side of the world, right? What is it called? I can't remember. Is it Inside Out or something like that, right? So it's like, the candlesticks show you one side of it, Heiken Aishi shows you another side of it. Good thing is that if, for example, if you're using a trading view, you can actually favorite both of them. So when you're analyzing something, a chart, right, you can just as easily toggle over to the Heiken Aishi interpretation of it, right, to give you a good gauge of like, okay, what should I expect from here? Am I expecting a breakout? Am I expecting a reversal? Candlestick patterns is telling me one thing, but what is the Heiken Aishi telling me, right? So it really gives you a pretty good approach to understanding how it works. Okay, my bit of my take on Heiken Aishi is that you can't use it in isolation to trade. Rather, you should use it in combination of a couple of things, which Annabelle will be taking you guys through later, right? You know, you need to use it in combination with stuff like trend lines, with wedges, with triangles, with divergence, with support and resistance, with breakouts, right? You can use Heiken Aishi as a very good complementary tool to really give yourself a better, higher probability kind of a setup. Okay, and that is where we'll be looking at some live chart examples later, right? And then how we can then implement it into a trading strategy. It's pretty interesting stuff, right? It's a very, very different take from the traditional approach to trading Heiken Aishi, right? Many of the trading strategies out there, they just, you know, they purely look at Heiken Aishi in terms of like how the bar is being formed, when it changes between red and green and red, right? It mainly looks at that. But when you know the purpose of how Heiken Aishi is created, right, how it's calculated, what it's useful for, and of course all the other stuff that we've learned in IC markets, then you know, you can actually implement it and really improve your trading, right? So a few things that I just to check with you guys, do we have any first timers over here? I do see a couple of names which are pretty new to me, right? I got Chacha, right? I got a Chris Van Sebrek, right? Couple of familiar names, right? Is there anyone here for the first time? Right? Hey Chacha, nice to see you, right? I got a person here called Best Friend. I got Best Friend. Yeah, who's our best friend here? Yeah. We got Godwin. All right. Okay, Chacha's from Thailand. Good stuff. Right. Yeah. Anyone here for the first time? Fazila's here for the first time, right? Vixen. Yeah, I think I've seen Vixen around before, right? Yeah. So I think we got a couple of first timers over here. Most of you guys have been around for a while, right? So what I do want to take this moment to share with you guys. Yeah, Pedro, I know you've been around forever, right? Don't worry. Yeah. Well, I'm just gonna direct you guys to a couple of important pages to take a look at. All right. The first page is of course IC Markets YouTube channel, right? Well, not this one. IC Markets YouTube channel playlist, right? The first one is of course the IC Markets webinar playlist. This is the first one that you want to go to, guys. If you can, oops, wrong chat. I'm gonna paste it in the chat. If you can head over here, right? You notice all the different webinars it covers. Now we have more than 73 webinars, right? The most recent one, margin leverage and swaps. Some of you guys were requesting for it. Go check it out. I think it's a very good interpretation of how, what kind of margin, how much leverage you can use, what kind of swaps, and you know how it caters to different kind of trading strategies. Go check it out. All right. Then yeah, you know, a previous webinar, earnings report, fundamental analysis, right? A much more holistic kind of education for you guys. Go check it out. All right. So this is one of the pages that you can go to, and the other page, right? icmarkets.com, right? You want to go to webinars over here, and these are all the upcoming webinars that you can register for. All right. So if you guys want to support Cass, tomorrow you can join her for her live market analysis session, right? Otherwise, I think the English webinars, yeah, the upcoming ones we have next week would be on Renko charts. Pretty interesting stuff, right? But yeah, you know that I have seen some of you guys request for Renko charts and how to interpret it, how to use it. We'll be looking at it next week, right? And then we go deeper into like risk management, right? A little bit more of an expanded version of it. Hey Vincent, nice to see you too, man. Right, so these are key pages that you can take a look at, right? And of course, now I'm going to, without digressing too much, right? Without digressing too much, some of the things that you want to take note of, right? Hey Fabio, 10 minutes late. There's no worry. Yan Chang, nice to see you too, man. Nice to see you too. Okay. Disclaimer, as usual, guys, remember everything in this webinar is educational in nature. Nothing should be construed as investment or trading advice. Please do your own little due diligence before you guys trade. All right. Now, today I'll be introducing a different person, right? Your host for today would be Annabelle, right? She's an analyst here at Adverse Fortune Group. And for those of you guys who are here for the first time, right, and are wondering, right, okay, what is Adverse Fortune Group, right? We are the 2019-2020 and 2021 Best FX and Best finalists for Best FX and Best Equity Research. Work with major financial institutions, telling them where the markets are heading. But with a special partnership with IC Markets, where we're bringing you guys the good stuff, the juicy stuff, the stuff that take a trading to the next level, the stuff that you don't read on Baby Pips and Forex Factories, a little bit different interpretation to it, right? And it's especially today's topic, right? Today's topic, if you'd like to play breakouts, right? If you really like to play breakouts, this is a particularly good trading strategy. It works slightly better for breakouts than even when you're playing reversals, you know, you can't catch it right at the top. You know, for example, if I were to draw something, you know, if I was a reversal here, right, and if I was playing a reversal from here, right, a Heiken Aishi, Heiken Aishi will probably not get you in over here. It will not get you in at the top, right? But Heiken Aishi, right, will help you catch the confirmation better, right, when the reversal happens, right? This is because of the, you know, how they calculate the candles, right? Especially they are very, very strong candles where they are very, very small wicks, right? Heiken Aishi is pretty good in catching those, right? No, Shahim, it's always Forex Army, the Forex Army, right? Yeah. So if you, oh yeah, for those of you guys who want to check out our website, which we are still revamping a bit, you know, you can go to the forexarmy.com, right? I got a couple of my indicators and tools over there that you can check out. Some of the trading guides too. Fabio, are you using the Heiken Aishi in the Nike Tick trading strategy? Right, I can see how it'd be pretty good, right? If you can share with me a little bit more. Oh wait, I entered in H1. Look at I assume M1. Wow, okay, M1 is a little bit intense, man. For okay, but if you're scalping, I understand why, right? Because if you're scalping, usually your trades, M1's a little bit intense. M1, M5 might be slightly better, right? But yeah, if you're scalping on H1, I can see why you use M1 for Heiken Aishi. All right, it's interesting. I haven't looked at it in the trading room yet. I've seen that you posted some stuff there. I'll go check it out in a bit. All right. But yeah, so this is introducing your host for today, right? The topics that we're covering, right? I'll just touch on this a bit, right? We do need to know what is the main thing about Heiken Aishi, right? How is it calculated? And very importantly, how is it different from normal candlesticks? Because when you load them, you'll notice that, hey, there are a little bit more candlesticks than the normal candlestick, right? There are a little bit, you know, there's a little bit, the shadows are different, the wicks are different, the colors are different, the open and closing prices are different, right? So how is it different, right? Annabelle will take you through that. And very importantly, after that, we look at the practical side of things on how you can use it in trading, right? Looking at some examples, right? You can look at how you can combine it with different indicators, because Heiken Aishi by itself, you know, is usually not a good way to trade in isolation. It's pretty good when you combine it with other indicators, right? Then we'll go into a time of creating and crafting a strategy, right? Annabelle will be showing you some examples behind, you know, how you can use it, how you can piece together multiple things of what we've learned, you know, divergence, chart patterns, trend line breakouts, the Ichimoku, right, support and resistance, you know, how you can combine it together to really craft a trading strategy. All right, thanks for sharing, Fabio, right? So what I always encourage you guys to do, right, hammer her with questions, right? Yeah, don't hold back, right? She literally has another screen that is open over here just to monitor the questions that are coming through, right? So yeah, you know, have fun in today's session. And let me know how it goes, right? And yeah, over to you, Annabelle. Okay.
Yeah. Hello. Hi guys. Hi Kelvin. Okay. So today we'll be talking about the Heiken Aishi chart. Hi Bob. Hi Diana. So this is my second time hosting the webinar with you guys. Morning Fabio. Yep. Oh, hi Desiree. Good to see you. Yep. So if you have any questions, feel free to ask me because I have another screen that is open, right? So let me jump on today's webinar. We'll be talking about the Heiken Aishi trading strategy. Oh, isn't at full screen? Give me 1 second. Morning. What do you mean? Sorry, Fabio. The slides isn't at full screen. What are you looking at? Oh, it's okay. Okay, I'm assuming it's all good, yeah. So I'll continue with the webinar, right? Yep. So like Desmond has mentioned, I'll be talking about Heiken Aishi. Actually, for this trading strategy is quite straightforward. It's just like how you're gonna spot it, how you're gonna the way you look at the chart, how you're gonna analyze it is the key. So with this trading strategy, it doesn't work on its own. It's combined with other indicators that can help you better redefine your trades. Okay, I'll go to the next slide. Right, so what is Heiken Aishi? Anyone here has used it before or is doing some research on it? Let me know. Right, so the Heiken Aishi technique is a Japanese candlestick based technical trading tool that uses candlestick charts to represent and visualize the market price data. It's slightly different from it looks similar to your normal candlesticks, but it's slightly different in the way that it presents itself, right? So it is used to identify market trend signals. So in which direction is the market going, whether it's bullish or bearish, it will be very clear in the Heiken Aishi chart instead of a candlestick chart. And then this method uses average price data that helps to filter out all the noises when you compare it with normal candlestick, right? So Heiken Aishi means average bar in Japanese. So later I'll show you some calculation of how they actually derive at this candle itself. The calculation is slightly confusing, but it's just for information and knowledge. So what it does is it uses average price data. So actually I realized something. The candles that are presented or are reflected on the chart itself, right? It's always start or ends at a 50% mark of the previous candle. You realize, right? It is different in the sense that if you look at normal candlesticks, it will kind of look like maybe like this. But for Heiken Aishi, it usually is very neat in the sense that it will cut maybe it will start or close at a halfway mark, right? As you noticed, right? This helps to filter out noise so that you can better capture a trend instead of your normal candlesticks, right? So it identifies trend periods, potential reversals, like maybe if you see a doji, maybe it's time for a reversal, and classical technical analysis pattern. Okay, so how do we actually read the Heiken Aishi candle? It's actually quite similar. So you have the green and the red candle, or sometimes it's the hollow or the filled candle, meaning the hollow, or there's the black. Black is the filled candle, yeah. Okay, so for the normal bullish candlestick, which is a green candle, your close is above the open, okay? And then for the bearish candle, which is the red candle, and usually black, if you are using the black and white candle, okay, your open is big, is larger than your close. Oh, okay, give me 1 second. Okay, give me 1 second. That means I need to ask Desmond to actually filter this, to change the screen. Oh, give me 1 second. Sharing wrong screen. Sharing the wrong screen.
We're sharing the wrong screen all along? Oh my god, goodness.
But how come it will swap over? I didn't touch anything.
That means I might have shared the wrong screen.
This is what happened all the time.
Oh my goodness, guys. Why didn't any of you guys tell me that, yeah, they've been sharing the wrong screen? Okay. Okay.
At the notes. Yeah, I'm gonna kill Desmond for that. Yeah, the notes helps to prompt me on what to say. Right. Okay. So this is how you actually read the. Yeah, this is how you actually read the candles. It's quite similar to your normal candlesticks, right? It's just that on the chart itself, it looks different overall, right? So a long green candle or hollow sticks shows strong buying pressure over a 2-day period, right? You can see here. So long green candle indicates an uptrend, okay, while long red candle indicates a downtrend. So how you actually define whether the candlestick is strong or whether the momentum or trend is strong is by the body of the candle itself. So like your usual candlestick, if the body itself is bigger than the wick, it means that it's in a very strong momentum, be it bullish or bearish, right? So for bearish momentum, the absence of the wick below actually shows that it's strong in the bearish momentum, while for bullish is the other way, meaning to say that if the top wick is small, it indicates that it's strong in the bullish momentum. Okay, so we're looking at the top wick for bullish and then the bottom wick for bearish, right? Okay. Okay, so like I mentioned, for the formula itself, it's just for information and for knowledge purposes. So some of you might be curious on how the calculation actually come about. It's indicated here, right? So this is a calculation for how they actually calculate the prices for the candlesticks and how they reflect it on the chart, right? So for open price, open of subsequent bar plus close of subsequent bar divided by 2, okay, you can just take a read, right? So when calculating the Heiken Aishi formula, we use the open close data from the previous period and the open high low close data from the current period. So it actually takes the previous and the current prices, okay, to modify the values that are displayed on the candlesticks. So yeah, this is just additional knowledge if you want to know how they derive at the candles. Okay. Okay, so how is it different from your normal candlesticks? He shows us the average. Fabio, he shows us the average price. So if you calculate, you take the. Oh shoot, sorry. Okay, I have some questions. He shows us the average price, right? He show us the average price, meaning you mean the candlestick. So if you calculate, you take the body or the wick. We will take the wick, right? Because it's reflective of the total price. Okay. Oops. Yes, correct. We take the wick. Okay, so this is the difference between the traditional Japanese candlestick chart. As you can see here, this is our normal chart where you have your open, close, high, low, which is kind of messy because I mean, people, as humans, we are quite visual creatures, right? So the Heiken Aishi actually acts as a support to show you in which trend or which direction or momentum that the market is headed, right? So for Heiken Aishi, is actually smoother in a sense that you don't have all these small minor wicks that gives you makes you a bit confused on how the market is going, right, as a whole. So it uses 2 period of moving average instead of the high-low close price, and it's easier to spot your trends, like whether it's a downward trend or upward trend, and where the reversal might be, depending on whether there's a doji or whether you have a very it's a bit messy. Okay, anyway, what I'm trying to circle here is the very strong bullish candlestick here that is signaling that, you know, the bullish momentum is very strong, hence it's going upward. As you can see here, consolidation here. You have a doji, you have all the indecisive candlesticks here. Okay, so for candlestick wise, sometimes it might not capture your gap up or gap down, but for Heiken Aishi it actually captures, right? And the difference is also how price is displayed in terms of open and close. Okay, so like I mentioned, you know, for some stock or indices, or sometimes even in FX you have a gap up or gap down, so you won't be able to catch this area, right? But for Heiken Aishi, it is actually reflected because of how they calculate based on the calculation, right? So it's clearer in this sense, like as a whole, it doesn't have any gaps. It's more visually easy to understand and accessible, right? Okay, so how to use it in trading? Okay, so the Heiken Aishi also has three trends as a normal candlestick, which is the bullish, bearish, and the reversal, right? Okay, so for the Heiken Aishi technique, it reflects the trend prevailing in the market through indicators itself, right? There are 2 main aspects of the Heiken Aishi indicator, meaning, like I mentioned, bullish, bearish, and trend reversal. So number 1, we will talk about trend strength. So we have the bullish. Okay, how do you define whether a bullish trend is strong, right? If you look at a normal candlestick chart, so a strong signal for an uptrend is shown by the presence of a lot of consecutive green candlesticks without a lower shadow, right? Without the lower wicks. Okay, so like I've mentioned before, if you want to define, let me erase. If you want to know how strong a trend is, or how strong the candle is also actually defined by whether there is a top or bottom wick. So for bullish trend, the shorter the wick itself, the stronger the bullish trend. For Fabio, yes, the body size of the Heiken Aishi is very important as well. Okay, so this compared to maybe this is stronger, right? Because of the calculation, like I've shown you just now. Okay, mathematically, this would be a stronger candlestick compared to the smaller one. Okay, so for a bearish trend, same thing. A strong downtrend signal is shown by a lot of consecutive red candlesticks or filled candlesticks. Yeah. Okay. Okay, and we have the reversal. Sorry. So for reversal wise, we often look out for the doji candles where, you know, you know that this signals mixed market sentiments, where the market doesn't know whether it should go up or down. Okay, so often when you see this type of consolidation, it means that the market is unsure of the trend, whether it's moving up or moving down. Okay, so here we have the triangle. So there are three types of Heiken Aishi triangles, being the ascending, descending, as well as the symmetrical triangle. So for the example wise, I have cut out a few from the trading view just to show you what it means by ascending and descending. So usually for ascending and descending triangle wise, it not necessarily means that it will go in a continuation pattern, right? Because I have also noticed from past trade analysis or experience that it could actually reverse as well. It doesn't mean that it always goes in continuation. So for this triangle wise, you can use it with other tools like maybe your support and resistance, right? Your trend lines, where's the breakout zone, your retracement tools, extension, expansions, right? So it doesn't always mean that ascending triangle means that it will always continue in the ascending momentum. And also descending triangle doesn't always mean that it's always going to be continuation of the bearish momentum. So it's, yeah, so Diana, especially there is news or fundamental analysis or any important keynotes that are announcements that are coming out, it might even change the direction. So it's depending on other factors, other indicators that helps to give you the extra boost, right? So for this Heiken Aishi, I would use it as an additional support or indicator to tell you whether the trend is going up or down. Okay, but for example purposes, I will just follow the fundamental understanding of the ascending triangle. So it means that it should ascend, right? Continue to ascend, because right here you can see that there is a very strong key level here. So I can also add the additional point that it has broken out of the key level, hence is also going in a bullish momentum, right? So it's squeezing this part here, okay, as well as the descending triangle. So prices have broke this key level, and you can see that the breakout is very strong, right? On this candle here. Okay, so yep, this is the descending triangles. And then we have the trend reversal tools, which is the rising and the falling wedge, as well as your doji. Usually doji will signal a mixed market sentiment or a trend reversal, which means that maybe the pattern, the chart is going to go in a reverse direction. So often when you see something like this, maybe it's signaling you that it might go in the opposite direction, right? So a trend reversal signal helps you to determine when you should exit or maybe change the direction of your trade, right? It helps you to give you the additional information on when you should exit. So instead of losing the whole pot of money that you have made, maybe it's time to exit and change the direction, or just exit and do nothing. Okay, so for Doji Candlestick, it is a candlestick with a small body, right? I didn't put example because I'm pretty sure all of you know what a doji means. So it's a candlestick with a very small body and very long shadows. So it always signals the presence of market uncertainties. So when it comes to Heiken Aishi, it signals trend reversal. Okay, so often in Heiken Aishi, candlestick with small bodies indicate trend pause or reversal, right? Okay, let me erase this. Okay, and then we have the wedges. So the difference between, I was slightly confused previously when I was learning the wedge as well as the triangle, right? So you, on my previous slide, okay, this is a triangle, but this is a wedge. Can y'all see the difference? Okay, so for a triangle, you kind of have to come together at the end, right? And by theory, it's supposed to go in continuation. However, what a wedge is actually kind of parallel lines. Okay, it's not exactly coming together, but it's close by and it's in the same direction. So it's pointing towards the same direction, right? And this often signals a reversal. Okay, so like I mentioned again, it also depends on other indicators like maybe market news announcements, your other tools that you use like your RSI, your moving averages, your retracements and all that. So it not necessarily always have to be reversal, but it tends to reverse for your wedges, for your wedge. So there are two types, which is the rising and falling wedge. You can see from here that it's quite obvious. Okay, a rising wedge indicator requires a trader to wait until the candlestick breaks below the indicator's bottom line, right? So we are waiting for it to break this level to signal a reversal. Same goes to here, waiting for it to break the top level before it reverses. Okay, so generally, whatever that I've shown you here, like the wedge and the triangle, usually for the Heiken Aishi charts, this is what happens when you see this kind of pattern. You will usually reverse, but it's not 100%, right? Like I mentioned, depending on your other indicators that you use. So later on, I'll move on to the live charts to show you some examples. Okay. Okay, so some advantages and disadvantages of the Heiken Aishi. Okay, so it can be used in any time frames. Like someone mentioned just now that he's using M1. Okay, I think it's, you can use M1, but it will be very intense. And actually, I'm not too sure how you use it on M1 because I thought from the calculation, they need to consolidate the prices from the prior candlestick. I mean, it is possible, but I don't know how would the calculation work. Okay, but anyways, it can be used in any time frame, meaning from your H1, H4, from your daily to your weekly to your monthly. It can be used in any time frames depending on how you analyze it, right? Okay, the bigger time frames are more reliable, obviously, for all for most cases, higher time frames are more reliable because it's less noisy. So the ability to combine with other indicators means that it can be combined with other technical tools such as your RSI, your moving averages, your retracement, okay, to give you a even stronger signal on the market movement. Okay, filters out market noises, smoothening effect. Okay, the indicator filters out market noise and reduces small correction, making the signals more transparent, right? The smoothening effect makes it easier for trend identification. So it helps you to see the charts clearer, whether it's moving up, whether it's moving down, whether it's reversing. It's actually very straightforward. It's just knowing how to combine it with all other factors, right, for this topic. Okay. Okay, these are all the plus points, sorry. Okay, so it's easy to read. Like I've mentioned, the chart is very easy to read. You don't need other skill sets to actually know how to read a Heiken Aishi. It's purely moving up or down or a trend reversal or continuation. Okay, accessible on most platform and does not require installation. So on your MT4, on your TradingView, on wherever it is, on your IC markets, trading platform, it should be there and doesn't require installation. Okay, and then we have the negative part, which is no full price information, meaning to say the data is average, meaning based on calculation wise, the data that is shown or reflected on the chart is based on average prices. Hence, it does not actually show you the open and close prices. So this may not work well for scalpers. That's why I'm trying to understand how you actually use the Heiken Aishi on the M1. Okay, because it's not efficient in the sense that the candlestick requires price information from other periods, right? So the trade setup takes longer time to develop. Okay, maybe you can share with me how whether it's efficient on the M1 time frame for it, or if it works very well with other indicators. Okay, and then may not, yeah, so like I mentioned, the chart may not be responsive enough for day traders. Okay, it's too fast paced. Okay, let's move on to charts. I'll show you guys some examples that I had. Okay, maybe I'll start with USD. Right. Okay, so like I've mentioned, this is we have the normal candlestick chart. It's really actually quite similar. It's just that when you look at your Heiken Aishi, it's actually clearer in the sense of direction wise, maybe by colors or visually. It's just easier for you to know whether it's in a bullish or a bearish trend. Okay, but obviously you can't use it on its own. It doesn't work that way. Okay, so my example here combines my Heiken Aishi with other trend indicator. For example, right here, okay, you can see the bearish divergence. Okay, one, it's going up, but at the bottom on my RSI, it's actually going downwards. So this is a bearish diversion. We are looking for a reversal here, as well as you can see here. Okay, hang on 1 second. Let me change the color. Can I change to orange? Okay, bearish divergence. Can see a slight double top here, right? Usually double top is signaling the opposite direction. Okay, and then you have, let me see whether there is a, okay, there's a bullish trend, right? So right here, how do you actually use it to better define your trade? As you can see here, there are many indicators that actually show you whether it will go in the opposite direction, and the Heiken Aishi actually helps you to confirm it, right? Because right here, when the first candle is actually showing you that it's reversing, at this second candle, you might not know whether it might come down and pull back up, or you'll go down and continue. So by the third candle here, if you can see, it's a small candle, so it still signals uncertainty, but by this candle, okay, it's actually very strong. It's pretty strong because the candle is huge. Let me try to, oh, I can't. Okay, this candle is huge here, so it actually gives me this extra confirmation that bullish momentum will continue. Okay, so like we've said, the Heiken Aishi acts as a confirmation or extra support to help you, to assist you through your where you should actually place your trade, or where you should actually get out of a trade or take profit, etc. Right? So I have used a divergence, I have used a double top, I have used a trend line, and Heiken Aishi. So four indicators. Oops. 4 indicators to tell me that it is going in the bearish direction, right? Hi, so we have someone who asks, hi, which do you prefer for H4 time frame, Renko or Heiken Aishi? Is it advisable to use it for trading XAU USD? Thank you. Okay, so we'll go into the Renko charts in the next session, but today we'll focus on the Heiken Aishi. Which do you prefer? So for now, I would prefer to use the Heiken Aishi chart to actually trade the XAUSD. I can actually show you some examples if time permits later on. If you want me to actually compare whether Renko or Heiken Aishi is better, I can share with you in the next session, right? Okay. Okay. Move on to the next. Oops. Sorry. Okay. So the next example. Okay. We'll stick with this. Okay. Same goes. We have the. Let me change the color. Give me 1 second. Okay. Okay, here again, same thing. We have a divergence. Let me lift it up a little bit. If not, it's too close. Okay, do we have a trend? Or do we have maybe a okay, this looks like a okay, this is a rising wedge, right? So rising wedge, like I've mentioned before, it looks like it has to be parallel in going in the same direction, but it doesn't combine like your triangles. It doesn't go this way. So this is probably a rising wedge. So it usually signals a reversal, correct? So right here, okay, you can see. Here we are. Give me 1 second. Okay. I'm just toggling between the two to see whether there's any difference that I can share with you. So okay, so for this I have used the divergence. Sorry, give me 1 second. Let me clear this up. The divergence, the rising wedge. Let me see whether there's a trend line. Okay. Give me 1 sec. Use this. Okay, this trend line I'm drawing is just to help you maybe define your trades, right? For better entry or better, yeah, okay, probably here. Because right here I can see that it's consolidating a little bit. So for the rising wedge, usually it signals a bearish momentum, but right here, if I were someone who is trading, I will be a bit unsure, right? Because it's sort of like consolidating. I can see some dojis here, so I won't be very sure. But to make your trade more certain, right? That's why hence I draw this trend line. I have one, a divergence. Number two, I have my rising wedge. Number three, I have a trend line. So based on this, I will make sure that it kind of breaks my trend line and shows me that it's going in the opposite direction before I take a trade, correct? So right here, this line exactly here is quite strong. So probably I will only enter a trade, maybe somewhere here or here. It can be here, but for a additional boost or additional confirmation, you may want to wait one more candlestick. So this Heiken Aishi actually tells me that, hey, we are quite strong in a bearish momentum, right? So if you place your trade somewhere here for a once it breaks the trend line here, if you place your trade here, probably your stop loss might be somewhere here on top of the wick, right? So it falls down nicely. Can you see? So if it's solely based on the Heiken Aishi, it doesn't work because it will be sort of like taking a gamble because you are just riding the wave. But with all other indicators like your RSI, your rising, falling wedge, your other tools like your triangles, it actually helps you to define, helps you to confirm where your trade should be placed at, right? Okay, let's see. Okay, maybe you can do this. I don't know why is this here, but anyway, okay. Oh, okay, no, this just ignore this. So this USD CAD. Okay, here, same thing. I have my divergence, right? I have okay, I have the overlapping support resistance. I have my, let me see. That's nicer. I have my retracement tool, okay, at the 23.6%. My Heiken Aishi is quite strong here. Okay, so right here, what I did was there is a bearish divergence here. Okay, I will be keeping a lookout at this point already because this is where it stopped. Okay, at this point I'll be keeping a lookout. Okay, I have my 23.6 retracement here, and as well as the overlapping support. I have a, let's see. Okay, I have a trend. I have a quite strong, or it might be a channel actually. Okay, not that clean. But anyway, I have a divergence. I have a 23.6 retracement. I have a trend, bullish trend. So what I'll be looking here is for it to break this level before I actually take a trade. Okay, so by this level of divergence, I'll be keeping a lookout to see whether there are any strong bearish momentum or strong Heiken Aishi candles, which I actually think that this is quite strong because the body is long and the wick is small. So at this point, I will be quite confident to take a trade on the next candle once it actually breaks out, right? So at this level here will be a time to consider, since there are so many indicators that signaling that it will be a bearish momentum, right? So how the Heiken Aishi works: stop loss. So we have someone, Steffi is asking where your stop loss be. My stop loss will be at the top of the previous candle, but it's also depending on how much you want to risk. Some people might even go to the previous, some people might even willing to take a bigger risk for a maybe bigger take profit, right? So it's depending on your risk appetite. Some people might put it at the previous swing high. Some people might actually place it here where the overlapping, sorry, this is where I will take my position, sorry. Or you can put at your previous swing low, previous swing high, depending on your risk appetite. Okay. Okay. I'll go on to the last one, which is quite interesting. So for the AUD USD, again, we have this is a bullish. This is what AUD USD, right? We have a bullish divergence here. We have a sort of like a falling wedge here because it's in the same direction and it's not really connected. Okay, so usually it signals that it might go in the opposite direction of the trend, a reversal, once it breaks out of this level. Okay. And then you can use your other tools, like maybe your retracement levels to see whether there are any okay, I'll take the 127. This is the extension, a very nice extension here. So at this level, actually, okay, sorry, I won't digress to Fibonacci. So anyway, we have our 127 levels. Okay, we know that it might actually bounce off here. Okay, so it did go into a bullish momentum. We have a falling wedge, signaling that it will go in a bullish direction if it breaks this level. And then we have a bullish divergence, signaling bullish as well. So we have three signals that are telling us that it might be bullish. So what I will do is I will look at the Heiken Aishi to confirm. I'll wait for the breakout first, and then I'll wait for a confirmation. So right here, you can see that this candle here, where I'm pointing at, this candle is actually very strong, right? So once it break out, maybe your entry level could be somewhere here. Your stop loss, depending on your risk appetite, can be on the previous candle or the lower low. Okay, depending on your risk reward ratio. Okay, sure. Okay, so actually, okay, just let me conclude. The Heiken Aishi is actually a very easy tool to use. It's just that you have to use it with other indicators, because on its own it doesn't really work. It will just look like your normal candlestick, your engulfing and all that, but it won't be engulfing because it always starts at the 50% mark. But what I'm trying to say here is that it can't work because on its own there is not much information unless you add it with other indicators to use it as a support or a confirmation for a certain direction or a certain trend, right? So this is how you actually use it with other indicators to better improve or redefine your trades. Okay, so 1 second, Diana. After, go back to the ascending slide. Okay, let me try ascending slide. You mean this? Okay. Simon, on the examples you have shown, most trends have retested the trend line and Wedges. Simon, I don't quite get your question. Maybe can you explain further? Desiree, it starts at the 50%, but the wick is the same height as the actual candle wick. Yes, the wick is the same height as the actual candle wick. Yes. It might differ slightly because of the calculation. Okay, if you have any other question, feel free to post here. But I've come to the end of the session. What I will leave you guys with is the Heiken Aishi is not difficult to understand. There's only this much strategy that you can use it for. It's very easily read. Don't dwell too much on how it's calculated, because no one actually go and um, um, calculate the formula itself. It's just for knowledge purposes on how they derive at this strategy. So for Heiken Aishi, it's really just to show you where and which direction is moving, whether it's going to reverse. It helps and act as a form of support to all your other analysis or all your other indicators, right? Okay, so thank you guys for tuning in. You have been very patient, and okay, I hope to see you on the next session on Renko, if we have one. Okay, thank you.
Let me just check it. Let me check.